Good afternoon, ladies and gentlemen. Welcome to the First Property Group PLC annual general meeting. Throughout this recorded meeting, attendees will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab just situated on the right-hand corner of your screen. Simply type in your questions at any time and press send. I'd now like to hand over to Chairman Alistair Locke. Good afternoon.
Thank you. Ladies and gentlemen, thank you all for attending. I'd like to welcome everybody that's here and everybody listening to this presentation. My name is Alistair Locke. I'm the chairman. I'll be chairing the meeting, and I'm joined today by my colleagues Peter Moon, who's a fellow non-executive director, Ben Habib, who is the chief executive officer, Laura James, the finance director, Jill Aubrey, the company secretary, whom I suspect you can't see, and Jeremy Barks, business development director. So we will be handling the formal matters first. So the formal matters at this meeting relate to the report and accounts for the year to 31st of March 23. And with the consent of those shareholders present, I'd like to take the notice of the meeting as set out on pages 73 to 74 of the report and accounts as read. Yep, thank you. I will now ask that I take the report of Haynes Watts as set out on pages 28 to 32 of the report and accounts as read. Thank you. The company shareholders have been able to submit questions in advance of this meeting and will also have the opportunity to submit questions, as was just said, during the meeting via the Investor Meet Company platform. I will deal with those questions at the end of the meeting once the formal business is concluded. I declare that the quorum required by the Articles of Association of the company is present and that the meeting is therefore properly constituted. On your screens, you will see the ordinary and special resolutions being proposed, and after there's been a show of hands on each resolution, I will advise you of the proxy count. So Resolution 1, I now propose that the report of the directors and the audited accounts for the year ending 31st of March 23, now submitted to this meeting, be approved and adopted. And I'll ask Mr. Peter Moon to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 39,303,474 shares in favour, 1,910 shares against, and 22,479,283 abstentions. I now hand over to our acting chairman, Mr. Peter Moon, for the next resolution.
Thank you, Minister. I now propose resolution number 2, whereby Mr. Alistair Locke be reappointed as a director of the company. I will ask Mr. Ben Habib to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 39,259,543 shares in favour, 22,485,776 shares against, and 39,357 abstentions. I now hand back to the chairman, Mr. Alistair Locke.
Thank you. I now propose resolution number 3, whereby Mrs. Laura James be reappointed as a director of the company. And I'll ask Mr. Jeremy Barks to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. Proxy vote was 39,459,503 shares in favour, 22,485,557 against, and 39,357 abstentions. I now propose resolution number 4, whereby the directors be authorised to reappoint Haynes Watts as auditors of the company to hold office from the conclusion of the meeting until the conclusion of the next general meeting of the company at which accounts are laid. And I'll ask Mr. Peter Moon to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 39,484,679 shares in favour, 20,455 against, and 22,479,283 and 283 abstentions. I now propose resolution number 5, whereby the directors be authorised to fix the remuneration of the auditors. And I'll ask Mr. Ben Habib to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 39,484,679 shares in favour, 22,479,738 shares against, and 20,000 abstentions. I now propose resolution number 6, as set out in full on page 73, which is an ordinary resolution and requires authority to authorise the directors to allot shares and or grant rights to subscribe for or to convert any security into shares. I now propose that the directors be authorised to allot shares and or grant rights to subscribe for or to convert securities in accordance with the terms of resolution number 6, and I would ask Mr. Jeremy Marcus to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 39,352,730 shares in favour, 22,625,203 shares against, and 6,484 abstentions. For resolution number 7, I'm going to demand a poll to be taken, as I am entitled to do under Article 74.1 of the Company's Articles of Association. I will mention that the proxy vote was 39,165,601 shares in favour, 22,812,332 shares against, 6,484 abstentions. Each shareholder, proxy and corporate representative will be issued with a poll card. If there's anyone who thinks they should have a poll card but doesn't, please raise your hand. They can't do that online, can they? No. I should mention that for those shareholders who've already lost a proxy, they do not, of course, need to complete a poll card unless they want to change their vote. You have 3 options for each resolution. You can vote for, against, or you may withhold your vote. A vote withheld is not a vote in law and will not be counted in the calculation of the proportion of the votes for or against the resolution. Will you please complete your poll card for resolution number 7 by ticking the appropriate box depending on how you wish to cast your vote. Please then just sign the poll card, indicate you've done so by raising your hand. Company Secretary will then come round and collect your completed poll card. Hang on, I've got a poll card here somewhere. What do I do with it? Poll card. Right. So I now go to, do I do this proposal resolution number? Yeah, I propose resolution number 7 as set out in full on page 73. It's a special resolution and requires authority to authorise the directors to disapply statutory preemption rights in respect of new allotments of shares and the sale of treasury shares. I now propose that the directors be authorised in accordance with the terms of the resolution number 7, and I'd ask Mr. Peter Moon to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
Will you please vote now? Right. So the results of the poll have now been calculated, with 39,165,601 shares in favour, 22,812,332 shares against, and 6,400 abstentions. I therefore declare the resolution has not been passed. For resolution 8, it's also a special resolution. I'm going to demand a poll to be taken, as I'm entitled to do so under the Article 74.1 of the Company's Articles of Association. I should mention that the proxy vote was 39,328,134 shares in favour, 22,556,283 shares against, and 100,000 abstentions. Each shareholder, proxy and corporate representative has already been issued with a poll card. I should mention again that for those shareholders who have already lodged a proxy, they do not, of course, need to complete a poll card unless they want to change their vote. So you have the same three options for each resolution. You can vote for, against, or you can hold your vote. But a vote withheld is not a vote in law and will not be counted in the calculation of the proportion of the votes for or against a resolution. Will you please complete your poll card for resolution number 8 by ticking the appropriate box, depending on how you wish to cast your vote. Please then sign the poll card, indicate you have done so by raising your hand. The Company Secretary will then come round and collect your completed poll card. I now propose resolution number 8, set out in full on page 74, which is a special resolution and requires authority to authorise the directors to purchase on behalf of the company its own shares in accordance with the terms of the resolution number 8. And I'd ask Mr. Ben to lead to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
Will you please vote now? Right, well, I declare the poll closed. The results of the poll have now been calculated with 39,328,134 shares in favour, 22,556,283 against, 100,000 withheld, and I therefore declare that the resolution has not been passed. Ladies and gentlemen, that concludes the formal part of this business. I'm now required to read a statement which was released on the regulatory news service this morning. So, thank you. So I'm afraid this goes on a bit, but we are required by law to read this to you. First Property Group, the property fund manager and investor with operations. Oh, no, beg your pardon, I can start again. The group continues to steward shareholder funds with great care. Net asset value per share has been broadly maintained in the face of extremely challenging market conditions for the property sector over the last few years, in particular from lockdowns and the subsequent working from home trend, interest rate rises, rampant inflation, and the drive to net zero. In spite of these headwinds, the group has reported continuing leasing progress at its group properties over the past couple of years, which will be reflected in income and capital value growth in due course. The internal rate of return earned by the group is impressive, 19% on an annualized basis after the admission of its shares to trading on AIM in 2001, 19% on an annualized basis since the peak of the boom in 2007, before the onset of the credit crunch, and only -3% since March 2019, before the onset of COVID-related lockdowns and the consequential market difficulties. And since the financial year end on 31st of March 23, the group has achieved leasing progress at Blue Tower, its directly held office property in Warsaw, and at Maestro Business Centre, an office building in Cluj, Romania, in which the group is a 21% shareholder. It has also acquired the minority share interest in ENS Estates Limited, which owns a supermarket in Praga, which is a suburb of Warsaw, resulting in the company now owning 100% of the shares in ENS. Total funds under management at 31st of August 23, including properties owned directly by the group, amounted to £436 million. At the end of March 23, it was £454 million. Third-party funds under management at 31st of August 23 amounted to £383 million, which was £400 million at the end of March 23. Of those funds, 60% are invested in the United Kingdom. The reduction since the financial year end is explained by the sale of one property in a UK fund valued at 5.4 million, reductions in property values of 7.98 million, and a weakening of the euro, the currency in which our Polish and Romanian properties are valued. Of that amounts to £3.62 million. Group cash at 31st of August 23 amounted to 6.64 million. At the end of March 23, it was £7.65 million. This equates to 5.66 pence per share, 6.82 pence per share at the end of March. The reduction was mainly due to capital expenditure incurred at Blue Tower, Warsaw, in respect of upgrades to the heating and cooling system, tenant fit-outs associated with new leases, and the cost of buying out the minority shareholders in E&S. Group remains vigilant to market opportunities, in particular with respect to its new activity as a lender. Thank you for that. I will now hand over to, it ends the formal part of the business, so I will now hand over to my colleague Ben Habib for a brief presentation, and following this we will answer any questions that have been submitted in advance or during the meeting.
Thank you very much, Alistair. So you should all have access to and can see online a presentation for this AGM. I'm going to start on page 5 of the presentation, which sets out the net asset value per share of the company from 31st March 2007 to 31st March 2023. And as you can see, just by a quick look at that graph, everything was heading upwards effectively until we hit, COVID-induced lockdowns in 2020. Ever since, and ever since then, we've had effectively, significant headwinds for the group. Initially, in terms of occupancy levels in the various properties we own and manage, and then paradoxically, actually things got much worse after the end of lockdown. Lockdown, funny enough, wasn't so bad for us. We collected, I think, 97% of all income that was due to us, Jill, something of that order. And so when lockdowns ended, we all kind of thought, right, we're back to business as normal. And no one had predicted the damage that had been done to the global economic ecosystem by lockdowns, breaking supply chains, breaking labor markets, and the geopolitical stress that they also brought to bear. So we emerged from lockdown into a new crisis in which inflation was rampant, interest rates were obviously increased in order to meet that inflationary problem. Capital exited developing countries. Indeed, capital pretty much exited the entire world, with the exception of one country, which was the United States of America, which had been the source of what people might be familiar with and is called the carry trade for many years, since about 2008, effectively with US interest rates being so low from 2008 onwards. The essential trade had been to short US dollars and then to invest in higher earning currencies, including, of course, developing countries such as Poland, Romania, where we are, and to a lesser extent in the United Kingdom. But with interest rates in the US going up, that carry trade reversed with a vengeance. So we saw in the first phases of the sterling and all other major currencies dropping in relation to the dollar. We saw capital evaporate from Poland, Romania, other developing markets back to the US. And that's been reflected in a number of ways in Poland, which is where we own the bulk of our properties, to which First Property Group itself has a direct interest or indirect interest. And the impact has been as follows: as interest rates go up, obviously the return you earn out of rent from your properties reduces, and as capital evaporates and interest rates go up, capital values drop. Banks become less ready to lend. Investors therefore become less ready to invest. You get a standoff between buyers and sellers, and that's roughly where we are in the markets. And I think the best stat to exemplify the net result of all of that is that investment volumes in Poland have dropped by about 60% this year compared to last year. And remember, last year was already slightly subdued because we were just coming out of lockdown. So there's been a complete disruption of the capital markets, at least in which we operate, as a result of lockdowns and then the broken supply chains and rampant inflation that followed. And it's these headwinds that we're now navigating. Turning to page 6, we're therefore actually very proud of the rate of return that we've earned for shareholders ever since our admission to AIM in late 2000, in the year 2000, the latter part of the year 2000, having earned having earned an 18.77% internal rate of return, which, by the way, takes payment of dividends into account ever since we've been on the market. That's 18.77% per annum every year since the 1st of April 2001. And then from the peak of the market just before the global financial crisis in 2007, we've earned an even higher rate of return. And I think part of the reason for that higher rate of return since 2007, was that the central bank response to the problems that were created in 2007, 2008, or manifested themselves in 2007, 2008, was of course to slash interest rates. So it had the opposite effect of what increases in interest rates are now having. And even though we all feared greatly back in 07, 08, what the future held for us, given the financial meltdown that we were experiencing then, looking back now at it, that was a relative walk in the park compared to where we are today. And so it's no surprise then that since 2019, having gone through lockdowns and the difficulties there, followed by the ones I've just described after lockdowns ended, that NAV has dropped by 3% per annum since then, which, by the way, is a market-beating reduction. You know, the markets generally have taken a much bigger pounding than our NAV has. Of course, we still live in extremely uncertain times, and we will find out, no doubt, what the future holds for us, but it's relatively unpredictable at the moment. On page 7, we have a chart which breaks down broadly between the various investments we have where NAV comes from. And the interesting bits here to look at are FOP, which is the largest contributor to our NAV. FOP, FPROP Opportunities PLC, is a Polish fund in which we have about a 45% interest, and that owns a number of properties, all of which are doing quite well. They've gone through lockdowns, they've come out the other end of it with rents up, very largely occupied, small vacancies here and there, but otherwise very largely occupied. And that's a key component for the group. The other big contributor to NAV is Blue Tower, which is a central Warsaw office block. Warsaw is doing much better than the other cities in Poland. There are problems in Krakow where there's an oversupply of property, but Warsaw, there's demand from tenants continuing. The economy of Warsaw is ahead of the economy of Poland, which in itself is doing relatively well compared to other economies, though of course the withdrawal of capital from Poland is not without its effects. But Blue Tower, we think, is a really good core property for the group to own. Gdynia is a property which was the subject of a complex restructuring a couple of years ago, where shareholders will remember we restructured the debt on it with the bank and effectively took complete control of it at a value of 16 million euros, with a deferred consideration from the bank of 12 million euros. That property was completely vacant when we had carried out that restructuring with the bank. It's now about 30% let. We continue to have tenant demand, and we expect to sign a lease or two there quite soon. But it is not as buoyant. The Gdynia market for occupational demand is not as buoyant as Warsaw, and it may take a little time to get that property leased up. Felix is an office block that we own in Bucharest, where we restructured the lease with the main tenant a couple of months ago, and actually we've extended the lease to a 7-year lease. He's taken the lease over the entirety of the property. We had got 470 square meters vacant there, and a property of about 2,500 square meters, but now it's fully leased on a 7-year term to a good covenant. So we're pleased with the way Felix is performing. ENS is one supermarket, I won't go into it. 5PT is, I think we've got a 40% share of 5PT, which owns 3 properties in Poland. Again, very largely let, doing well. We've owned it for a long time. It just keeps doing what it says on the tin. Corso, Efrog Galleria Corso is a minority share that we own in a shopping centre in the northwest of Poland. Again, it's doing extremely well. It's a holiday town, Świnoujście, which is the place where it's located. It's a seasonal shopping centre, but does extremely well. Efrog Krakow Limited is a minority interest that we have in an office block in Krakow. Now, Krakow is a slightly difficult market, and this is an 11,000 square meter building where we got a major vacancy during lockdowns, a lease to Axel Springer that occupied about 5,000 square meters of the building, so nearly half of it expired. And since then, in these headwinds, we've leased up about 3,000 square meters, and we've got other tenant interest. So we do think that's a core property that should, over time, produce good results, notwithstanding the difficulties that we've been through. Efrog Cluj is an office block that we, again, have a minority interest in Cluj, which is the second city, if you like, in Romania. We've had a number of vacancies during the course of the last year, and every time we've had a vacancy there, we've leased it up. It's been no problem. So another great property in the group. Efrog Phoenix is a 23% share that we have in an office park in Krakow. This is arguably the most difficult asset of the lot that we are in the process of repositioning. And the problem with this asset is that it's not downtown Krakow, which is where most people want to be. And with the oversupply of around 16-17% vacancy in Krakow, it's oversupply of offices creating a 16-17% vacancy in Krakow. It's been very difficult to release it. So we've got ongoing discussions with the bank there, fraught discussions with the bank, frankly, and that may result in an opportunity presenting itself over time. I know one of the questions online is, you know, is there any chance of opportunities coming out of adversity? And, you know, who knows, but that is proving to be a particularly difficult asset at the moment. And then, of course, we have quite a lot of our asset is held in cash, 6.77 pence per share. And then we have other minority interests in UK funds. But overall, actually, the group is in a really good place, given that we're in commercial property in a market where interest rates have skyrocketed over the last year, and there's been a major withdrawal of capital. I would just caveat that with saying that we can't. These are perhaps the most challenging times I think we've faced as a company since we were founded. I don't think any of the directors would disagree with me. I think this is probably the most challenging time, wouldn't you say, Alistair?
Definitely.
In the last 23 years
absolutely.
that we've had. And but what we are good at is being a guardian of our assets and making value where value presents itself. And I actually move forward with cautious optimism, and we will continue working night and day to make sure that we deliver returns to shareholders. Page 8 is a NAV bridge, as they call it, which shows how NAV moved from March 2022 to March 2023. I don't propose I go through it. It's just helpful for shareholders to be able to track that movement. I'm sure shareholders will be interested to know what kind of impact increasing interest rates are having directly as a cost on the group. And this is set out on page 9. So in the financial year 2023, interest costs on the group's debt amounted to only £500,000. In 2022, it was 330,000, equating to an average borrowing cost of 1.8% per annum when expressed as a percentage of the total outstanding group debt of 30 million. And 4.2% per annum if the deferred consideration of 17 million, that's on the Gdynia property and the other bit of Blue Tower that we bought last year, on which no interest is payable, is excluded. And I do think, he says with great hope and optimism, that we're at the top of the interest rate cycle and that things can't, I don't think we're going to see many more increases in interest rates, if any, any material increases anyway coming out in the next few months. Page 10 was a graph of which we were very proud as management until we were forced as a result of headwinds to cut our dividend. And the reason we were proud was that we'd always increased dividends every time our profits had gone up. As we grew, we increased dividends. And it is our firm intention to be as generous as we possibly can with dividends for shareholders, but always making sure that we retain the requisite amount of cash so that the group can go forward with confidence and take advantage of opportunities as they present themselves. Page 11 gives you a brief synopsis of the investment highlights since the preliminary results. I've talked through a bit of these already, but I'll just trot through this. The most significant event was the leasing of 2,100 square meters at Blue Tower. You'll remember that last year we bought another, we own 48% of Blue Tower. We bought another 32%, taking our ownership to 80%. The 32% we bought was about 7,000 square meters, 5,000 square meters of which was vacant. We've now leased 2,100 square meters of that vacancy. The part of the building that we bought was in particularly bad physical shape. Its previous owner hadn't invested in it at all for many years. And the capex and the reduction in cash that you've seen from the group over the last 6 months has really been in relation to fitting out this area that we bought last year. And now that we've done that, any further capital expenditure on this building is going to be effectively income-led. So, we're going to see if there is more outlay, income coming straight through as a result of that. And we do have confidence, as I mentioned earlier, in the Warsaw market, where the supply of new offices is basically completely dried up since interest rates went up. Developers have stopped producing vacant new speculative offices, and we would hope that rents will, actually go up, frankly, from where they are at the moment. FCROP Cluj, I've mentioned, we had a few vacancies. We've re-let it during the course of the year. And ENS Estates, we bought out the minority shareholders in it. And that's just one supermarket in a location called Praga in Warsaw, a supermarket we've actually owned since our first foray into Poland, and one in which we have great faith. Investors are obviously not keen on piling into property at the moment for reasons which should be self-evident given what I've been saying. So AUM has been under pressure, frankly. So at 31st August, we had 383 million under management, which compares to 400 million at 2023. We're doing a few sales in the various funds that we own, and we would expect AUM to continue to reduce a little as we go forward. But please be aware that the vast majority of the company's profits come from our direct investments. So that's investments in the properties we own, some of which are partially vacant at the moment. And as they lease up, our profit should go up accordingly. And, significantly also from our investments in the various funds that we have in Poland, where we have various levels of minority interest. And we would expect the cash generation and those assets to continue producing good profits for us. The sale of one property took place from a UK fund, which was 5.4 million, and the other reductions came from property value reductions of 8 million and a weakening of the euro of 3.62 million. Total AUM, including assets we own ourselves, was 436 million pounds compared to 454 million last year. And the weighted average unexpired fund management contract term is 2 years, 9 months. Now, it's going to be interesting to see how this plays out going forward. But what we've been doing as a team, as shareholders will also be aware, is that we haven't actually been targeting, for the same reason that no one else wants to buy property right now. We're not that keen on buying property right now. So what we've been targeting and what is the provision of new debt to owners of property in the market who we think may be feeling the same pressure that all property companies are subject to at the moment, and where we might be able to facilitate owners of property getting through this difficult period. And I think, Jeremy, I don't know if you'd like to say a few words about the efforts you've been making, because Jeremy Barkas has been spearheading that effort. talk a bit about the number of properties you've looked at, value of quotes. We haven't done a deal here, folks, ladies and gentlemen. We have yet to do a deal on the lending side, but we're getting very close to doing one, and we still think it's an area, where there should be significant growth going forward.
Yeah, we have established good relationships with a network of brokers acting on behalf of borrowers. We have had inquiries for about £380 million worth of loans that borrowers would like to borrow. We have made quite a few loan offers. We have, as Ben says, we've yet to make our first loan, but it feels like we're getting close. The terms of business that we are quoting on is up to 65% loan to value. We're quoting interest rates of 9% per annum or higher. 9 or 10 is where most of them seem to be, and we're not getting pushback. That seems to be broadly acceptable term in the market. We're seeking to make fixed term loans at fixed rates of interest, minimum periods of 3 years or more.
And our USP here really is the higher LTV, accompanied with no requirement for debt amortization, taking the pressure off the borrower, who we reckon is typically a refinancing what were 55% LTV positions, but are now 65% LTV positions because values have dropped, and where banks are now at around 45%, 50%. So borrowers are experiencing a kind of gap of about 15 to 20% that needs to be filled, and it's that particular borrower that we're targeting.
Yeah, so we hope to be able to announce more in the coming weeks and months. If anyone would like to join our pool of capital providers, please get in touch with me.
Yeah, great. Thank you, Jeremy. So why would you invest in the group at this point in time? Well, the share price seems to be very low. That seems like an obvious reason to invest in our shares. A marked difference between net asset value and where the share price is. But also, we've had a fantastic track record since 2001. We're a well-experienced, nimble management team. We will chop and change our investment strategies depending on what the markets are like, which we've done many times over the last 23 years. We've got diversified earnings from fund management fees through to direct property investments in Poland and Romania. We've got growth coming, inbuilt growth, once we lease up the 14,900 of vacant office space in the group's 2 directly owned office buildings. As we invest our cash, that should throw up returns. And we do expect to get new fund management mandates for the debt product that Jeremy's just described. And indeed, in the longer term, if and when we go back to raising new funds for direct investment in property. So overall, difficult times, but I think we're in a strong position, and there will be opportunities that come out of the market with, which we should be able to take advantage of. So I think after that, we'll move to questions.
Okay.
Yeah. So there are some questions online, and I'll just answer those as
Many of these questions, I think, are answered in your presentation, which investors.
Yeah, and I'll skip over them
if they've already been answered.
Yeah. So pre-submitted questions. How are high interest rates impacting the fund management business? Well, I think I've explained that, including the impacts on NAV. Is there an expectation of outflows? Well, we don't have open-ended funds. All our funds are closed-ended. So to the extent that we've got a mandate, that will continue to the end of the life of the fund. And the expiry dates of all our funds are set out in our annual report. Is there downside from negative operational gearing, lower fee income versus fixed overheads? I mean, there's always that risk in a company like ours, but of course we cut our cloth according to our means, and we will make necessary adjustments in costs as and when we have to. How is the downturn generating opportunities for the company? Well, the first opportunity is the debt product that Jeremy's mentioned. And of course, we will look for stress in the market and see if there are deals to be done. But we're not wholesale investing in properties, as I mentioned earlier. Would excess capital be better deployed in share buybacks? Absolutely not. right now is no time to be parting with cash. So it matters not that our ability to buy back shares wasn't passed at our annual general meeting. It's not something we would have exercised anyway. Can any real estate investment beat this trade? The trade of buying back shares is one which could land the group in an existential problem. So we're simply not going to go there. Are investors actually becoming more interested in fund management FPO offers? Well, again, as I mentioned, we don't have unit trusts or open-ended funds, so it's neither here nor there. And we're not seeking to raise new money for new mandates to invest in property because we think it's a dangerous time to be going into property right now. Valuations are depressed. Are institutional investors taking a longer-term view? Institutional investors are structurally leaving the market. This is the other headwind which I didn't mention. From a regulatory perspective, institutions are not incentivized to own property. And this has been creeping up on us over the last 13 years. Ever since the explosion in government debt, the regulatory environment has favored institutions buying government debt, supporting governments, as opposed to investing in equities and investing in property and other asset classes. And so we've experienced a structural shift from institutions away from property. What's the IRR for shareholders last 5 years? Well, we gave the metrics, from the start of the group's existence, from the peak of the global financial crisis and before lockdowns, which is about 4 years ago. So I think you've basically got the answer to that. Is the IRR calculated before or after bonuses? The IRR is calculated after all costs, including NAV, etc., after tax, etc. I refer to the options award announced on 4th April 2023. Can you clarify the reason why you feel the need to incentivize the CEO already holding a 13% interest in the company with over 46% of the total options awarded? Thank you for continuing to do these meetings in this online format. Well, the reason for incentivizing me is perhaps best answered by Alistair or Peter.
It's the clear view of the board that the driving force behind this business, since our listing on AIM, has been Ben Habib, and he has worked tirelessly on behalf of all of us throughout that period, and he continues to do so in a very difficult time. And his skill set is such that we are, in our view, very lucky to have him, because undoubtedly he could go and go elsewhere should he wish to, without too much difficulty. But we feel it's appropriate. It is very much geared to the results of the company. As you can see, obviously he does not earn anything like as much at the moment as he did when things were going well, and that is entirely appropriate. So we believe we have the best person for driving this business forward and for continuing to build it for the long term, because we're not taking a quarter by quarter view here. We're taking a much longer term view to build a company, and we think Ben is the man to do it.
Thank you very much, Alistair.
Peter, do you want to add anything? Are you comfortable with that?
Only that I think Ben has the vision, the flair and the connections and the process to take the business through very, very strongly indeed. And without him, it would be a poorer business for sure.
Thank you very much. I'm flattered and grateful to you for that. Thank you. Can you advise on communication with the largest shareholder, PG? It is clear from the voting, along with their history elsewhere, that they are taking an activist stance with their investment. Well, we can't speak on behalf of PG, whom I believe must be Peter Gillenhammer. We can't speak. I don't know what his intentions are. He is obviously at liberty to vote in whichever way he wishes to. We want a constructive relationship with all shareholders, no matter how large they are in terms of their percentage shareholding in the company. Has your successful deal making with Polish banks been included? What's the plan for refinancing Gdynia? Well, that's confidential at the moment. That is something that we will be handling in the course of normal business going forward. Has your successful deal making with the Polish banks been included in the IRR calculations? The IRR calculations, as already mentioned, are after tax and all other effects. Why do you think that the shares are trading at 1/3 of NAV? No idea. Next question. Vaughan M. Any view on dividend for next financial year? Same, less, more? Dividends, something, as I mentioned, something we were very keen to pay, which we were very progressive in the payment of when times were better, and we will, we'll continue to review our dividend policy based on how the future appears to be at any given point in time. But just to reiterate, we're keen to pay dividends wherever we can. And I think that concludes all the questions.
I think that's right. I think we've covered pretty much everything, and we've covered the some of the other written questions we had prior. So I think everything is fully covered. And if shareholders want to submit other questions to us after the meeting, we'll be happy to do our best to provide them with answers. But unless there's anything else from anybody in the room, I think we can say that the meeting is concluded. And thank you all very much for your attendance.
That's great. Alistair, Ben, and to the board of First Property Group, thank you very much indeed for your time this afternoon. Could I please ask attendees online not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the board of First Property Group PLC, we'd like to thank you for attending today's annual general meeting, and good afternoon to you all.